First, a quick review of the economic calendar for this week, based on the ForexFactory schedule. This week contains several high-impact U.S. data releases. On Tuesday, we have core retail sales and retail sales, along with the employment cost index. On Wednesday, we have average hourly earnings, non-farm employment change, and the unemployment rate. On Thursday, we have unemployment claims. And on Friday, we have core CPI, CPI month-over-month, and CPI year-over-year. This means that Tuesday, Wednesday, and Friday are all red folder, high-impact news days, with Friday's CPI releases representing particularly elevated volatility risk. These events are known to increase volatility, widen spreads, and reduce execution quality around the release windows. The desk does not trade the news. The focus is on managing risk around these events rather than trying to predict outcomes. Going into this week, the desk will continue to operate the current portfolio of automated trading systems across the same core markets. There are no permanent changes to the system set at this time. All systems remain subject to the same execution rules, risk limits, and portfolio-level controls. However, given the concentration of high-impact news this week, the desk will be more selective around the most sensitive sessions, particularly around the U.S. Open on red folder days. Any temporary restrictions or adjustments will be documented in the daily desk reports. Alerts for this week are configured with particular focus on Tuesday, Wednesday, and Friday, due to the cluster of high-impact U.S. data releases. These alerts are used to monitor when systems become active around key sessions, flag elevated risk periods, and highlight sessions where execution conditions may degrade. The purpose of these alerts is not to change system logic, but to ensure the desk is operationally aware of higher risk windows and can verify that execution and risk controls are behaving as expected. The overnight trading plan for this week is informed by a combination of historical performance by day of week, recent behavior, and the placement of red folder news events. Given the heavy concentration of U.S. data midweek and on Friday, overnight exposure will be more conservative ahead of those releases. Overnight trading may be reduced or disabled ahead of the highest impact events, particularly going into Wednesday and Friday sessions, where volatility risk is elevated. The objective is not to maximize activity, but to align exposure with sessions that historically offer better risk-adjusted conditions and to avoid unnecessary risk around major macro releases. Any changes to overnight exposure will be reflected in the daily desk reports. From a risk perspective, nothing changes. Risk per trade, daily loss limits, and account-level drawdown controls remain in place. From an execution perspective, the focus for this week is simple. Respect the calendar, follow the plan, and avoid discretionary interference. Execution quality and capital preservation take priority over trade frequency, especially on high-impact news days. At the end of the week, results will be reviewed against this plan. We will look at how systems behaved around red folder news days, how overnight sessions performed, whether alert focus days helped manage risk, and whether execution and risk discipline were maintained. The goal is continuous process improvement based on evidence, not short-term outcomes. That's the weekly plan for the week of February 9th. This is Systematic Pro Trading Desk, where trading systems meet real market results.